Time Warner reported second quarter earnings. The company beat the street on both the top and the bottom line. Joining us to pour over the numbers in a little bit more detail is our friend David Bank from RBC Capital Markets. Bloomberg has crunched the numbers, and David is one of the most accurate forecasters of media stocks. It makes him a Bloomberg best, not only a friend of the InsideTrack, but a Bloomberg best. David, thanks for joining us. So Time Warner exceeded expectations, top and bottom line. But I was looking at this earnings projection for this year, and the company said including low teens, but I see consensus was for about 14% earnings growth. So are they subtly guiding lower, or just does the language need to be parsed more?
No, I actually think they're subtly guiding higher. They changed the language from, I think, the last press release from low teens to, I think this one says at least low teens. So, you know, I don't view that as much of a difference, but I think numbers really aren't going to change much. So what you'll do is you'll flow the beat through. Numbers probably come down a little bit in the back half, but that's not a surprise given the deceleration in advertising. It's a fine quarter. You know, what I would say is, if you look at where the beat came from, ironically, it came from publishing, which I don't think anybody was looking for. And, you know, the other divisions, particularly media nets, were probably just a touch lighter than we expected, but not a shock given the ad environment.
David, we've seen the stock perform in a pretty particular way. You still have that $41 price target. Is that where you stand after this release? Yeah,
I mean, look, if you are in the flow, I think, in conversations with investors right now, yesterday we probably hit a peak of, or a recent peak of just concerns about, is the whole economy rolling over? Is the ad economy rolling over? And the stocks are really starting to discount a pretty massive deceleration in advertising.
Yeah, the last week, really heavy selling.
Right. So if you look at where the stock is trading right now, it's something like, between 10 and 11 times next year's earnings, which for this stock is really, we're really into sort of cheap territory here.
Yeah,
so
around $34 a share. Obviously, if you're sticking with 41, there's room to grow.
Right. So, and I think, most importantly, given the results we saw from CBS last night, these results, all you really need to see is that the ad economy is holding together, and the stocks look cheap. I think the skepticism is, it holds together till it doesn't hold together anymore. But for today, we really can't see a whole lot of evidence that, aside from some modest deceleration, that it's not generally pretty much holding together.
David, we thank you as always for your insight. David Bank, RBC Capital Markets, a Bloomberg best media analyst.